Jillian Sidoti from crowdfundinglawyers.net, and today's People You Should Know segment is featuring a very special guest. But before I get into that, I want to talk about consistency. Something I often preach when I'm out there teaching about how to raise private money is that you need to be consistent in your message and in your approach and in what you're doing so that people actually get the message. And unfortunately, I haven't been very consistent in doing these People You Should Know segments. And I apologize for that because a lot of you have been writing and saying, hey, do you have any more of these videos? Are you going to be doing any more? And I just kind of actually ran out of really great guests until today. And today's guest is Brad Sumrok. Hi, Brad.
Hey, Jillian, I'm excited to be here.
Oh, I'm so glad. So Brad is into all things apartment buildings, and I want you to go check out his website, Rat Race to Retirement, which I think is such a great website name, and that is the number 2, and we'll have it up there on the screen for you so you can click on it if you're watching this on YouTube. So Brad, why don't you tell us, how did you get from the rat race to retirement?
Well, that's why I have that website, because that's my personal experience. So everything I teach and do is very personal, and I'm very passionate about it. So like so many other people, Jillian, I was taught to study hard, get good grades. I came from a working class background. My dad made $42,000 a year. We grew up in Pittsburgh, Pennsylvania. He never finished college. So he encouraged me to study hard, get good grades, save my money. And I did all that. So I became a chemical engineer, and that brought me to Houston, Texas. Never really liked my job, and I tried to, move up the corporate ladder and make more money and be more successful. I got an MBA along the way, and I thought that was going to be my ticket, woohoo, to financial freedom, I actually thought about going to law school once, just once for a short period of time, but and I found myself, in my 30s, 17 years in corporate America, worked for several different companies, got laid off once, got fired once, and really didn't know what I wanted to do when I grew up. And, I was actually making 6 figures, but I read the Rich Dad, Poor Dad book, and that book changed my life. And it taught me about things that my parents never taught me about, and not because they didn't want to, but because they couldn't. Because one of the things I learned is if you haven't done it, you can't really teach somebody else something. So my parents, my dad almost graduated from college and almost had a professional, a higher income, but he didn't. So that's what they wanted for me. And when I read that book, it taught me, gave me the mindset to want to be an investor and a business owner. And that's how I went right into apartments.
So you didn't even start with single families, you went straight to apartments.
That's correct. I went to a seminar. I invested in my education, by the way, which I think everybody should do, no matter what it is that you're going to do, whether you do single family or notes or apartments. Go and seek out somebody that has experience and learn from them. And so that's what I did. And that's how I started. And so, that was back in 2002. And my first investment property happened in 2003. And it was a 32-unit apartment building. Yeah,
and with 32 units.
32 units. I bought it with my own money. I was, I got put 20% down, got an 80% loan. It was a small building, Wow. And I still had a job. So I did it part-time, which I tell everybody now. I'm like, don't quit your job to be a real estate investor. I'm like, you can work for a couple years and replace a 6-figure income working part-time. And then when you're able to replace your income, you could retire from your job and leave the rat race. And that's exactly what I did.
So that is so cool. So you didn't just cut the cord on the job and say, that's it, I'm out of here. You started slowly, although going from 0 to 32 units is not that slow. I have to say. Normally we hear the guy who's like, well, I bought my first single family flip in, Barstow, California, or, some other location where you can get a cheaper property, right? And then moving on and upward to apartment buildings. So how do you go from 32 units to say maybe 100 units?
Well, and that's the thing. And that's where you need to start leveraging other people's money, other people's time, and other people's experience. And so, when I bought the 32 units, that was the most the biggest property I could afford with my own money.
Right.
And then I was tapped out. I didn't, and keep in mind for those, I worked for 17 years in corporate America and saved my money. So a lot of people ask me, well, Brad, how did you come up with the down payment on that 32 unit? And the answer is 17 years of saving my money in the corporate America,
Sure.
which I had a job from 22 until the age of 35. So once I bought that building and I was cash flowing and everything, and I wanted to go bigger, that's when I learned about syndicating and raising private money. And
do you tell your students that they can go right from, let's just say a student comes in, and for those of you that don't know, Brad does mentor a lot of people out there in terms of how to get into their first apartment building. But when you're mentoring those folks, do you suggest that they go straight from nothing to syndicating, or is there a step in between there?
Well, it all depends on their personal situation, but I'll tell you a general recommendation is yes.
Mm-hmm.
Because it's easier to buy 60 to 100 units and hire a professional management company because you have better economies of scale than it is to buy, 5, 10, 15, or 20 units and try to manage it yourself. Mm-hmm. And that's coming from somebody who started with 32 doors. And as soon as I went from 30 doors to 60 doors, it became easier, not harder, because I had a full-time manager and a full-time maintenance person. And then my next deal after that was 250 doors, where I was able to raise $2 million from other investors, following what your firm teaches, 506B, pre-existing relationships.
Sure.
And it became so much easier when I went bigger. So now, Jillian, the cool thing is I started with a 32-unit building, and it sounded like a big deal at the time, but most of my students now are buying 60 to 120 units on their first transaction as apartment investor / syndicators.
Wow, that is incredible. I don't think I ever hear that. So let's talk about your event on November 4th and 5th. We're going to be there teaching the private money part. But man, I think I need to stick around to learn how to get into these bigger apartment buildings. Tell us what somebody could learn at your event. Well, first of all, tell us where it even is and what it's all about and what people are going to learn at the November 4th and 5th event.
Yeah, so it's in Dallas, Texas, in a little town called Addison. It's actually North Dallas. It's 20 minutes from DFW Airport. It's all on my website, which you announced before, ratrace2retirement.com. And this is not the typical multi-speaker event that a lot of people are used to going to, where the event facilitator is just at a facilitator. At our events, I'm the main instructor and pretty much the only instructor. So, you or Gene will talk for 10 minutes about private money and syndicating, and you'll have an exhibitor booth there. And there's just a handful of service providers there, because this isn't a pitch fest. This isn't about like, hey, come and, have 30 people trying to sell you their services. Yeah. It's a training event. And so what I try to do, and I've been doing it now 3 times a year for, since 2013, is I try to take 15 years of experience in my head about how to set your goals, build a team, select your market, find the deals, analyze the deals, fund the deals, rehab the deals, and manage the deals, so that you could potentially make double-digit returns for you and your investors and get out of the rat race. And for the people that love their jobs, then they could just have more money and more income to do what they love to do in life.
That's awesome. So tell me, you said a lot of stuff is going to go on at this event. They're going to learn. I kind of started losing track of the list. I probably should have taken notes, but there was one thing you said in there, which I find fascinating. Choosing your market. How does one choose their market?
Well, let me just say that, I'll say Sumrok students, we've bought over 7,000 units in 13 different states since 2015. So we're buying all over the country.
So in 2 years, you've bought 7,000 units.
Well, my students have.
I know, but with your guidance, that's crazy. That's a ton of real estate. Keep going.
Yeah, and we're buying in markets that make sense. So the things that we look for are things like population growth, mm-hmm. job growth, landlord friendly, business friendly, and cap rates, around the US median or a little above. So we're not buying in markets like Manhattan or Boston or Seattle or San Jose in the Bay Area or LA. It's just too expensive there.
Right.
You'll for that $100,000 income stream property, that would sell for over $2 million, which for people that understand cap rates, you take the NOI divided by the cap rate to get the price. So you could buy that same $100,000 income stream in places like San Antonio, Dallas, Tampa, Orlando, Phoenix, Jacksonville, Columbus, Ohio. I've just rattled off, some of my favorite markets. Some of these markets, I own properties myself for a lot less money.
Yeah, so it makes much more sense to try to move into that space. And how I know we're supposed to keep to 15 minutes, but I'm fascinated, and you've said a lot. So you also mentioned on-site property management and how important that is. When you go and purchase a new building, do you keep the current management? Do you have your own management that you're going to put into place, or do you go out and find totally new management for that market, and how do you vet that?
Well, I would say the majority of the time we're going to bring in our own management company.
Okay.
Because, you've heard, I don't know if it's Einstein or somebody that said, hey, if you want to get, you can't keep, if you keep doing the same thing over and over again, I can't remember how that saying goes, but maybe you know what I'm saying there. So if you want a different result, you have to take different actions.
Sure.
Now, sometimes the management company in place is just doing a fantastic job, and the owner just ran out of funding or doesn't have any more capital to continue, renovating the units or putting into the property. So that's something we'd evaluate. But generally speaking, one of the, we look for value added opportunities, Jillian, and the value added opportunities could be, capital improvements.
Mm-hmm.
But it could also be just better or different management coming in, a new set of eyes. And sometimes management companies that came in on fire, they just get complacent, or the owners get complacent, staying on top of those management companies. And then a new owner comes in, and then you're being told by your management company, oh, we can't do it this way here, and this doesn't work here. And it's not that it doesn't work, it's just that they don't want to do anything different.
Right.
So a lot of times we come in and we'll find a new management company in that market.
Wow. Okay. So I'm going to do my best to come out on the 4th and 5th. I know Jean for sure is coming out, but this has been an incredible amount of information. And I want to remind everybody, if you want to sign up for that event on November 4th and 5th, go to ratrace2retirement.com. And learn how you can go from 0 to 250 units. I mean, that's just incredible to me, because so many times we're taught, oh, you're going to start with a single family flip and then maybe move up to a 2 or a 4 unit, and then maybe 20 units, and then maybe you can get over 50 units. But this is just awesome, and to be able to do it all with syndication money on top of that is great. So Brad, I always end these segments with asking a very important question. What book do you recommend to our viewers?
Well, if the viewers were paying attention, they already know the answer.
I think we all do. Rich Dad, Poor Dad.
It's Rich Dad, Poor Dad, and I'm sure a lot of people have read it. But, I just read it again recently for like at least the 10th time, because there's just so much information in there. And it's really about, changing your mindset from being an employee, or even now, like, when you run a couple apartment buildings, or you run a seminar business, and you're an S, self-employed, and you just want to do everything yourself. And you just have this belief that if you want something right, you got to do it yourself. And I mean, you can't really grow, and you can't get to the next level if you have that belief. So being a business owner is really about building a team. And that's one of the things that you need to do as an apartment investor. And, you're going to, like, for example, when I go out for financing, do you really think I'm going to go personally to talk to 20 different banks?
Yeah.
No, I have a mortgage lender or two that I will go to. And yeah, they get a loan origination fee because they place the loan for me, but they're the experts, and they're going to go to 20 different banks. And that's going to allow me to focus on finding the deals and raising the money, I don't visit my properties on a daily, weekly, or even monthly basis because we find really good property management companies that could run the properties day to day for us.
Right.
So when you learn how to act as a business owner and, have a good team around you, whether it's legal, property management, financing, your investors, your contractors, things become so much easier. And so it's really important to really understand what ESBI really means and how you could apply it. Going out and doing small apartments or single family investing, you're definitely not in that B category when you're trying to do all that yourself. Even with the 32 units, like I said, it became so much easier. And that's one of the things we do at our event in November 4th and 5th is it's not just an educational event. People will be able to come to that event and not only learn the content, but they'll be able to walk away with, they're going to meet you and Jean.
Yeah.
They're going to meet a lender. They're going to meet an insurance company. And they're going to meet people that they could start building pre-existing relationships with so that at some point in the future, they might be able to invest with people. So it's like an entire solution that we've put together for people that want to be successful in the apartment business. And I don't know any other place where people can go to get that, available to them.
Sure. I have to make a little bit of a confession and a commitment at the same time. I've never read Rich Dad, Poor Dad, and I am going to get it this weekend. So, awesome. And I'm going to read it. So anyhow, everybody, thank you so much for joining us. And thank you, Brad, for being here today. That was so much information in such a short period of time. For anybody who wants more information, please go to ratrace2retirement.com. And also I want to remind everybody to go check out Crowd 2018 to check out the upcoming Crowd Converge conference in Las Vegas on February 1st and 2nd. So Brad, thank you so much again. And everybody, thank you. Have a great rest of your day.